Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A retailer and a visual computing technology company is what we're going to hear about in two separate installments in this issue of Top Stock Picks with our strategists, Ryan McQueenie and Brian Boland, who joins us remotely on Skype. And Brian, we'll start with you. You have that visual computer technology company, right? NVDA.
Right, NVIDIA, and the ticker symbol for NVIDIA is NVDA. It is a Zacks rank number 3, and that makes it a hold, and we'll go into the estimates here in just a second. But I do want to highlight the good divergence that I always love to see, whether it's a Zacks rank buy video or a top stock pick. I love to see a good growth score and a weak value score because that tells me right away I am on the right path. It should be noted that NVIDIA has earnings coming out Thursday after the close, and we can see it right here, the expected time. So after market closes, the AMC and 11:15. Earnings ESP is negative here. Earnings have come in just a little bit, so there's a little bit of trepidation out there for this name, but let's take a look at why I think that it's a good play. So first, we're going to go to those earnings and take a look at where they've gone. You can see the current quarter has moved down from $1.99 to $1.91. Next quarter moving down from $2.04 to $2. But if we look at the full year, and that's a little bit more important, we can see that there is a move from $7.91 only to $7.90. So that's a penny where, we were looking at roughly 8 cents here and 4 cents here. You'd think there would be 12 cents, but now it is really only translating to a penny. Next year, the estimate's actually moving the right way up, 854 to 859. And then we take a look at this little thing that we call the positive average surprise there for the reporting history. Over the last 4 quarters, all nice beats and all pretty good. I mean, the last beat wasn't that tremendously large at only 5.4%, but still pretty good. So, now it gets into the idea of why would we be looking at the stock? It's down quite a bit. The market is soft. This one still trades at a pretty significant, PE here, 26 times forward earnings. If we look at the price to book, it's also pretty elevated there at 14 times. I see things like operating margin moving higher. Price to book has actually been moving higher over the last couple quarters here. Net margins moving higher. These are things I like to see. And of course, I see 40% year-over-year sales growth. So when I see that, I think, boy, wouldn't it be great if there was a nice little chart to show me how the sales have trended and the stock price? Well, here it is. I did it here for you guys. The one line here that is kind of constant and bumpy, that's going to be the stock price. And we can see the dramatic dip here from, the 260, 270 region to about 205 and trading just a little bit under that right now. And then we look at the sales. Here's a time where sales have moved lower. Here's a time where sales move. Here's a time where sales have moved lower. But as you can see over the course of history, the number has continuously moved higher, and that has dragged the stock along with it. So here is the most recent sales number here. It's 3.123 billion. We're now expecting 3.2 billion for this coming quarter. I expect it to do pretty well. So, to at least meet that number, possibly beat. So you're going to see that, trend lower in sales, which you've seen right there. It is going to move back higher. And if this corrective market comes to an end anytime soon, NVIDIA will be the spot that I would think that a lot of people will want to get their money for any type of snapback rally.
All right, thanks for that. Ryan, you've got ahead of retailers reporting earnings this Q3 season, you've got Fossil Group.
Yeah, I have Fossil. We actually had Fossil come in last week. Pretty solid earnings report. 19 cents per share in earnings. That was a surprise profit, actually. The Zacks consensus was calling for an 11-cent loss. It lost 11 cents in the year-ago quarter, so strong earnings growth as well. Revenue down a bit, below estimates, so that was kind of disappointing. But that kind of speaks to something which I'll talk more about later, and that's this idea that we're in this restructuring phase with Fossil. It lost 11 cents last year because it took a bunch of restructuring costs. Revenue is down because they're closing stores. That maybe on paper or really just off the top might not sound like a positive trend, but we've seen this happen over the last few years with these kind of specialty retailers where you got to figure out where you fit into this modern retail world, especially with Fossil, where they're known for their watches. Obviously been a lot of evolution in the watch game recently. Yeah. So I'm looking at different things than just, revenue's down, stores are closing. I'm looking at a lot of different positives, mainly gross margin expanding 720 basis points in the quarter. I think that this restructuring plan and this kind of slimming things down, cutting the fat, getting back into consistent profitability, I think this is happening a lot faster than investors expected it to. And then we talk about key areas for growth in the near future, and that's going to be, getting with the times. These smart watches, these connected watches. Connected watch sales up 30% year over year in the most recent quarter. So I like those two things a lot. Most importantly, though, guidance was improved, and it's revenue guidance that it was improved. Still looking for sales to decline on the full year to the tune of 9 to 7%. That has been brought in from 10 to 6% projections earlier. So a little bit better there for the revenue guidance, and we like that. But as we can see here on the 5-day chart, which encompasses when the report came out, stock just, nobody had any idea what they wanted to do with this after earnings. Kind of pulls back before the announcement, jumps up after the beat and raise, and then kind of pulls right back down again as we hit some market-wide volatility at the end of last week. You can see here, as we are recording this, up about 3% on the day, kind of continuing with this theme of what are we doing with this after earnings. I think that this is an opportunity to get in as things have pulled back a little bit, because I think as we always say here, that these earnings trends take a long time to develop. The true post-earnings reaction also sometimes does the same, takes a while to develop. I think this will end up being a quarter that really improves, shows that things are improving in the long term. But at the end of the day, here's what we're looking at long term. This is a 5-day chart. Let's take a look at the 5-year chart. Okay. It has not been something we'd want to own over the last 5 years. As we can see, the earnings trend trending upwards, bringing this to a Zacks ranked #1 strong buy. Has not been on the Zacks ranked #1 strong buy list a lot over the past 5 years. As we can see, share price consistently declining, along with earnings trends just kind of falling out. The earnings outlook just really falling consistently over the past several years. Kind of hit this bottom though in mid-2017, and it's been a slow trudge forward, but we're seeing the earnings bottom out as well in late 2017. That's trending upward. The stock has finally got some positive momentum to it. As we can see here, you can barely see it on this chart, but we're seeing a really strong tick higher for the forward-looking earnings outlook. We haven't quite seen the stock respond to it as we'd like to. I think, again, as I said, that gives us an opportunity to get in now. And I think there's also a value case to be made. If you look at just the current fiscal year's PE, trading out about 18 times, but you extend that out into next year, you look at the forward 12-month earnings, it's trading at about 12.8 times. That's a steep discount to its industry average. Add that to a lot of reasons to be optimistic about retail for this holiday season. I think there's a lot of things to like here for Fossil.
All right. Do either of you own either of these stocks?
I do not.
Brian?
I do not.
Okay. Thanks. Sorry if we woke you up.
That's okay. I was listening.
Don't forget more stock information on our website, Zacks.com, and all you need to do to get to it is get over to the homepage and start looking through it all. With Ryan and Brian, I'm Terry Ruffalo.